Hello, everyone. Welcome to the orientation of the first session on climate risk. So today's agenda is I'll give you a high-level overview of what this course is all about. What are we going to cover in this course? What is the expectation? What we'll cover, what will not cover, and the duration of the course, and high-level background of what climate risk is and why suddenly it has become so important in banking landscape. So it's just today is about like 5,000 feet overview of the entire landscape. So we'll touch upon key ideas, that has made climate risk so important today. And then towards the end, we'll answer any general question or feedback you may have about the course content. So that's the agenda. Well, let's get started. All right. So the course focus, there are actually three main, you can call modules or areas that I want to focus in this course. The first one, obviously, being the SCR certificate exam, right? That is conducted by GARP. The next exam is in October. So the major focus of this course is to prepare all of you for this exam. So in the SCR certificate, right? Let me give you more details about this exam. There are roughly 200 pages in that book. There are 8 total chapters. So hopefully we should be able to wrap the core syllabus for SCR in the next 2 to 2.5 months. So it will give you roughly 1.5 months to revise. Now the thing is, it is not mathematical. There is no maths. Okay, from the exam perspective, it's a non-mathematical exam, but there are lots and lots of facts that you unfortunately have to memorize. However, I would say there is 50% of the stuff is logical, so they are interconnected through reason and through by creating the right set of ideas, you'll be able to answer those questions. Okay, and there are 50% other type of content which are like just isolated facts you have to remember, exactly how you did in history. Okay, so that's the reality about this exam. Now, why you should do this exam? There are probably two main reasons. One is climate risk has become extremely important today. I'll give you the reasons why it has become so important today. So everybody wants climate risk professionals today, and if you do a certificate today, then obviously that gives a lot of boost to your CV. Banks are hiring climate risk professionals. There is good reason why. I'll explain later. So that's one reason. The second reason is this book is only 200 pages, close to 200 pages. Last year it was 179 pages. 50 pages have been added. Actually, the exact count is 227, and this will keep increasing. Okay, and the price will also go up. So I would say if you are thinking of doing climate risk certification, right now is a good time to do that, because you'll get better price as well as the syllabus would be manageable. Later on it can become 2 volumes, who knows, because there are so much content. All right, so those are the two things. Now the exam questions, unfortunately they look for each and every keyword in every sentence. If the volume or the size of the material is less, then every word becomes important. Correct? So it takes a lot of effort to memorize. There is a lot of memorization involved. That's the harsh reality. What I will try to do is create mind maps and flash cards for you. So that will have infographic, crisp bullet points, so that you don't have to go back and read the text. Obviously you have to read the text once or twice, but you cannot keep going back to the text again and again. it becomes very hard to memorize or remember if you just read it. It reads like a novel. Okay. So I'll try to create, infographics, pictures, even, give some good kind of tables, and try to relate the content to what's actually happening in real world, and create flashcards and share it with you, so that, you can use that. That is for efficient recollection. That's all about the exams. That will be the core focus. So going forward, next week we'll start the first chapter of SCR. All right. Excuse me. The next focus would be a regulatory landscape. Not necessarily I will come to this at the very end. We will cover this side by side whenever it's relevant. So I'll just, call out. So if you ignore this from an exam perspective, that is fine. But if you're appearing for interviews for a position that requires climate risk, definitely get familiar with the regulatory landscape. In the last couple of years, a lot of regulatory papers have come up. If you follow Basel, right, there are three main papers that have come up that explains different risk drivers, measurement methodologies, how the climate risk manifests into various form of mainstream risk, credit risk, market risk, all those, right? So they have given papers on that. Nothing is prescriptive at the moment, mostly, consultative guidelines. All right, so we will review those papers. Okay. IFRS has also come up with disclosure standards for climate risk. I will show you those two the papers of IFRS. So banks are supposed to start being compliant with the climate risk related disclosures from 2024 January. There are lots and lots of data points that banks have to report in the financial reporting. So that's IFRS. Then ECB also has come up with its consultative guidelines in terms of how to capture, monitor, measure, and report climate risk. So this is very important from a job perspective. Okay, so we will review the regulatory landscape along with the core material. So this is the backbone. Only if you are fully abreast of all that has happened, the history, the past, the present, the future, then you would be able to appreciate what these guys are talking about. Without this background, it will be hard to connect the dots, because ultimately, if you look at the disclosure standards, there are lots of data points they ask you to report. But to understand those data points, you'll find those terminologies difficult to digest if you don't have a background. So definitely this syllabus would be the your core sort of core foundation that will help you to appreciate the text in the regulation. Okay, so that's the second thing that we'll focus on. The third aspect is actual modeling, climate risk models. Climate risk models have existed, but independent agencies have used climate models. We use weather forecasting all the time, but weather is different from climate. One is short term, the other is long term. We'll talk all about those in the upcoming classes, don't worry. But given, against the backdrop of these regulatory requirements, banks have started considering climate risk models seriously, because these climate risk needs to be incorporated in our traditional risk measures, which are credit risk, market risk, operational risk. So we'll see in a couple of slides later how climate risks affect or manifest into these mainstream risks. So to give you some high level example, climate adjusted PD. We have probability of default, but depending on your counterparty situation, or depending on the vulnerability of your counterparty to climate risk, you need to start incorporating those additional risk factors which are coming from climate risk to have a better estimate of PD. Okay. And there are climate related stress testing. So stress testing always existed when there are scenarios. Normally we shock macroeconomic variables for stress testing, shock GDP, shock unemployment rate, right? But you need to start thinking of climate related stress test. What if there is a wildfire? What if there is an earthquake? Okay, so those things are part of your stress testing. Also the scenario analysis, both are similar, but this section is mostly focused on how to capture the climate risk, quantify the climate risk. So we will also focus on this. Now the thing is, there are not too much literature available on how to concretely calculate all this. The regulators have not given anything. So if you compare credit risk or market risk, there are prescriptive formulas, right? For standardized approach, you need to do this. For, let's say, advanced approach, this is what you need to calculate. Calculate in your own way, but calculate this, right? That's how that's how we can quantify risk in other risk areas. But in climate risk, there is nothing prescriptive in terms of how you need to calculate, but you need to start calculating those so that when the regulations come, then you are ready, at least with the data points. So that's at a high level what the focus of this course would be. Okay, starting with this as number one priority. So probably there'll be 12 to 14 or 15 classes tops to cover the syllabus. And parallelly, we'll work on this. This we will put it at the back burner for now because there is nothing concrete at the moment. But I will just keep the course, the SCR, the climate risk course alive in terms of, I'll keep adding more and more content in this area as and when I find relevant stuff. Okay, so we'll keep the course alive. This will be, for now, this will be our secondary priority. Primary focus is to prepare you to clear the exam in October. Okay, so that's the focus. Let me know if you have any questions, or we can take your questions at the end also. That's fine. All right, if no questions, let's proceed. Ankit has a question: how much study is required? So here's the thing. Actually, I am also appearing for the exam in October. Okay, so I would say 2.5 months it will take for me to complete it. Then probably you need to just revise and memorize all the bullet points. I would say 3 to 3.5 months should be good enough for anyone. July, August, September, we have to September or mid-September, we should be able to wrap everything up. And then in October, some mid-October, you can appear for the exam. There, obviously, if you sit for the exam, there is GARP gives you that textbook, which you need to follow. Oh, you're saying 0.3? Yeah. So for climate risk models, there are books, but it may be very irrelevant. I mean, there are big books also, which have models and models, lots of models. A lot of these climate risk models actually deal with time series analysis. You look at, patterns, climate patterns, and then come up with models. But there are books, but there's nothing like mainstream or popular. So at this point, let's hold on to that thought. Right now, I don't have anything, but yeah, as and when I find relevant material, I will include it. How much is the charge for the I think it is what is around $500, around that number. Yeah. Okay. If you are considering this, please do it now, I would suggest, because the size, the syllabus is increasing. It'll keep increasing. Right now, it's just only 200 pages. But if it blows up, it will become very difficult to clear that exam because it is intense. Lots of facts. right? And price will be also, price will also go up. But yeah, so that being said, we are at a very interesting stage where what will happen is, for sure, we know we have to incorporate climate risk in our models. But when we will, do that, that becomes critical in terms of there is nothing like there are no exact formulas given at this point, but who knows? Basel might come up with prescriptive ways to calculate your RWs and everything. That can happen any moment. We don't know, so we need to start preparing ourselves with enough data points. At least from a disclosure perspective, there are mandates. We know what we need to start disclosing. So we'll talk about this. Okay. And don't think this is optional. It's gonna be mainstream very soon. Okay, you have to know climate risk. All right, so let's talk about this. What is climate risk? Today, I'll just give you a very high level, 5,000 feet overview of what is climate risk. So there are two main things, right? One is called sustainability. Within sustainability, we have climate risk. So we are talking about climate risk, yes, but it's a component of a much bigger and broader concept called as sustainability. Now, the idea of sustainability is something that is actually known to us. This term gets thrown around everywhere. When we talk sustainability, what does it actually mean? Let's talk about sustainability, then we can talk about climate risk. Just, there is no right or wrong answer, just whatever comes to your head. What do you mean by sustainability? Consistency in a way, but consistency in what aspect? Ankit says long-term planning without impacting present. Yes, you are very close. Actually, that's the right definition. When you're thinking of sustainability, you're not only thinking about present, you're also thinking about future, right? We are developing day by day, but your development needs to consider the needs of future generation. How can you develop? How can you meet your own demands today without compromising the need of future generation? They should not be impacted. That's sustainable development. Climate risk is a specific part of it. But you will, so in our entire course revolves around these two topics. One is sustainability, which is a much broader concept. Within sustainability, we actually have three different terms. You must have heard about this: environment, social, and governance. ESG. ESG is a term that is being, that's the buzzword today in corporates. Within ESG, climate risk is part of E, environment. All right, let's talk more about this. First of all, let's talk about sustainability or ESG that I mentioned. Sustainability, as we just discussed, right? Ability to meet current needs without compromising the ability of future generation to meet their own needs. Okay, it's a much broader idea, but that's the idea. Basically, you don't only think about present, think about future. And then we have ESG. Both are pretty much similar, but ESG is a framework that corporates use. All right. So ESG stands for environmental, social, governance, three terms, ESG. It's a framework that corporates use to measure sustainability, how the activities that corporates are doing, what is the impact of those activities in these three fronts, how they are affecting the environment, on social dimension, what they are doing, and on governance side, what they are doing. If you take all those activities, their impact, then you can sort of kind of find a score, and that's however you calculate that score, that's called ESG framework. Okay. Now, why that is important today? It has become very important because those ESG metrics are being used by stakeholders and investors. Okay, you must have seen. So everywhere in corporates these days, they have waste management, and they try to reduce carbon footprints, right? So those are activities that they would do under environmental. And then under social, what are the factors? How you're contributing to the society? Not necessarily that is tied to your bottom line, not necessarily that improves your P&L, but it is important to create a good social image that is required for companies' reputation, correct? Also, governance. How is your, within the corporate, what is the corporate governance? How are the executives being compensated, right? And there are multiple factors. Let me give you some more examples. Yeah, let's talk about ESG first. So we are saying under E, you'll measure your carbon footprint. So for example, if there is a corporate which is into energy sector and using coal as the raw material to get heat energy, then there will be a huge carbon footprint, right? When you heat coal, obviously, there's a lot of CO2 comes out. So there is a lot of carbon emissions. And then waste management, right? Whatever comes out of your plant or factory, how are you disposing that? Energy usage for your plant or equipment or whatever. It could be your office also. How does that run? Does it run from clean energy, or it runs from some coal-powered power plant, right? Or oil, fossil fuel driven power plant. So those are all your environmental factor. How are you contributing to the environment? Okay. That's one. Then we talked about social. In social, we have all these labor practices. What are your labor practices in the company? Human rights, gender equality, diversity. These are the things that you see often these days, right? We are ensuring diversity in our workforce, gender equality, health and safety. All of these practices are under social. And in governance, we have the management, executive compensation, how the compensation is designed today. Is it tied to sustainable projects? Are executives drawing exuberant salaries, right? What are the ethics, bribery, anti-corruption policy? All of those are under governance. So all together, they are called ESG. That's the buzzword today. And there are lots and lots of companies which are bragging about ESG solutions, full end-to-end ESG suite. Okay, that will help to capture the data points, calculate ESG metrics, and report them. All right. So based on these dimensions, you can actually score a particular company. And how is that score important? Well, investors and stakeholders these days, actually, consumers and investors have become self-conscious. When coming from your own experience, probably you must have felt, if you see something with a energy efficient product or something that is organic, right? Then you tend to favor that product from a consumption perspective. So we are becoming a conscious society. We are taking this seriously. So this is from bottom up, and the stakeholders or investors, they are actually looking at ESG metrics for their investment decisions. Okay. Customers and consumers have become conscious in terms of investing into companies or stocks which have good ESG score. All right. So that's why ESG has become very important. Earlier, we used to have this term, CSR, corporate social responsibility. Okay. Companies do those corporate outreach programs all the time, right? What you are doing to the society. But now we have this term, ESG, which is much more comprehensive, that includes all three dimensions. There are rating agencies which have come up. They actually score companies on ESG. I'll show you, it's in the next slide. But just like Moody's, S&P, they give you credit rating, which reflects your probability of default. There are agencies that give ESG scores. Okay, so we can use that. And when we talk about sustainability, so both are similar. Sustainability is the broadest concept. It's a much bigger term. This is applicable for everybody. Human beings, households, corporates, countries, sovereigns, everyone. Every living being in the whole world, it comes under sustainability. But ESG is a term that was created for corporates mostly. Okay, so as when we talk about sustainability, actually, there are a lot of different definitions. This is the definition that is the most celebrated definition. Okay. And within sustainability, I took this from UN's 2030 Agenda for Sustainable Goals. This is called SDG, Sustainable Development Goals. There are 17 goals, right? You just can have a glance through it. No poverty, zero hunger, right? Good health, well-being. All of these are sustainable goals. Okay, so we strive to achieve all of this by 2030. That is the UN's agenda. All right. Yeah, so to summarize, there are, so we have talked about sustainability. Sustainability is a much broader concept that has all these different goals. And when we talk about ESG, especially we're talking about a corporate and how the corporate scores on these three dimensions. Okay, we haven't talked about climate risk yet. Climate risk is actually a part of E. So that comes next. Well, don't worry, this is at a high level. We'll again talk about each and everything in great detail later on. Okay, we talked about ESG ratings, right? So if you see, I took this from this website. So all of these agencies, they do have scoring mechanisms. They score the companies on the ESG dimension. Bloomberg, FTSE, ISS, MSCI. So I mean, the score could be numerical, or it could be like a rating. Okay. And as I mentioned, investors and portfolio asset managers are taking ESG score seriously, because investors demand that you take my money, invest in ESG funds. I don't want any other fund, or maybe this is my cutoff for ESG. Any company that you invest my money in must have a ESG score minimum this much. And this is happening. Okay, because this is a field where I'm working on right now in quantitative portfolio management. So it is a trend. Okay, investors are increasingly demanding their funds to be invested in funds to have a ESG tilt. Okay, so yeah, it's very important, has become very important for investors and portfolio managers. Feel free to ask me any question if you have at this point. We are just touching these, scratching the surface here. We'll do a deep dive later on into each of these topics. Okay, the second aspect is climate risk, which is actually a subset of sustainability. But this one specifically is more important than the other two. Of course, both, I mean, all three are important, ESG. But climate risk requires some special attention. Okay, as I mentioned, climate risk falls under environment factor. Okay. Now, if you see, let's break down climate risk. Within climate risk, we have two types of risk. One is called physical risk. The other one is called transitional risk. Okay. Now let's see what are the examples of this. Let's talk about physical risk first. Within physical risk, again, we have another layer. We can call some of the physical risk as chronic physical risk and some as acute. Now, before I show you the examples, can you take a guess what are the examples of physical risk? Going by the word, the name, what are the examples of physical risk? Wildfire, yes. We are talking about climate. See, we are under climate risk. Within climate risk, what are the examples of physical risk? Flood, yes. Global warming, yes. Any kind of disaster that you can think, which is environment related, all of those are climate risk. Exactly. Earthquake, global warming, flood, storm. But yeah, so depletion of O2, yeah, it can be called as a climate risk, yes, but O2, are you talking about O2 or O3? You're talking about ozone layer, I think. Or are you talking about oxygen? O3 is complicated. O3 is actually complicated. O3, the benefit of O3 is that it helps us from ultraviolet rays. That is a harmful radiation. But there is a downside of O3 also. Ozone actually traps more heat that leads to global warming. Okay, we'll get into all this. It's very interesting. All the how the global warming happens. What are the culprits that are the drivers for global warming? There will be a detailed discussion on this. It's very interesting. Hold your thought for now, but we'll come back to that. So when we talk about risk from a banking parlance, essentially we're talking about loss. A loss that is uncertain, which can happen because of something. Because of any kind of climate risk, are there going to be losses? Then it becomes a risk, correct? So when we are talking about physical risk, what are the different types of physical risk that can cause losses to my losses in my assets or portfolio? Now, you guys all correctly mentioned the different examples of physical risk. Yeah, one of those, I think in your example, all of those belong to acute. There is one that belongs to chronic. Can you tell me which one belongs to chronic? Go by the literal meaning of the word. All of those climate risk, physical risk that you mentioned are acute except one. No, sickness and disease is a consequence. It has nothing to do with climate risk, right? No, see, chronic, yeah, global warming is the right answer. No, think of climate related events. We are not talking about the consequence. You guys are talking about breathing problems, sickness, disease. Those are all consequences. We are not talking about that. We're talking about triggers, climate related triggers that cause losses in banks' portfolio. Okay, climate related triggers. What are those? Earthquakes, floods, storm, wildfire, heat waves, all those. Now, acute means something that is sudden in nature with devastating impact. For example, flood. Okay, acute. It's sudden and it will impact your properties, inventory, real estate, whatever you have near that region. It will cause damage to that. That's acute. Flood, storm, wildfire, these are all acute. Okay. Chronic means, if you go by the dictionary meaning, it's gradual. It is not all of a sudden. Chronic is like a slow poison. Slow poison, you don't see the impact immediately, but it has like a long-term impact. It will slowly kill you. All right. One example is global warming. We don't see that like immediately it came and went away. Nothing, not like that, right? It is global warming means the overall temperature of the world is increasing slowly. And if you give it sufficient time, you will reach a point where it will be impossible to recover. Okay. So to give you some more examples, as we discussed, right? Acute covers flood, storm, which are sudden in nature and that cause damage to assets. And chronic is more gradual. We don't notice the change suddenly, but you'll notice the change over a long period of time. But the impacts will be irreversible. It will be very difficult to control that. If the temperature of the globe has become, let's say, has increased by 5 degrees centigrade after, let's say, 100 years, can you do anything to suddenly make it go back to zero? You cannot do anything. It's hard to mitigate these effects, the long-term effects. You cannot do anything immediately that will resolve the issue. For flood and everything, yes, you can evacuate or do something, but how do you tackle these? For long-term impacts, you need long-term preparation. Correct? Okay, so yeah, global warming is a climate risk, physical risk to be precise, but it is chronic because it is slow and gradual. Similarly, sea level rise. We talk about the water level rising in the seas that is causing floods, right? Sea level rise is not something that is sudden. It is growing gradually. All right. That's at a high level. So this is all physical risk. Anything in the climate or environment that you see happening physically, which physically impacts your properties, assets, inventories, buildings, all those. Okay. Yeah. And not only properties, inventories, these have impact on living beings also, people, right? Someone has a question. Carbon emission is chronic. Yes, correct. Carbon emission has slowly, carbon emission is the main culprit for this global warming. So you'll find 60-70% of the entire course is dedicated to carbon emission. What are the sources? How do we control it? What are the different measures to reduce emission? A lot of these topics are oriented on revolve around that emission. How do we reduce emission? Okay, and yeah, handling carbon footprints through carbon tax and all those things. Okay, so this is physical. Everything you can touch and feel and see the impact in physical impacts. The other aspect is transitional risk. Going from one state to another, that poses risk. What is that? State 1 and state 2. Basically, see, everybody today is trying to switch to a low carbon economy. Okay, we are going for electric cars. We are going for wind energy, solar energy, all those things, right? Potentially, we are hoping, we're aspiring that we will switch to a low carbon economy with zero emissions, no carbon emission. Everything environment friendly, climate friendly. Once we switch to that kind of a state, a lot of these technology or products or assets will become non-viable, right? If there is a coal powered based plant, and nobody wants coal. CO. So there are multiple ways in which transitional risk can happen. One is through regulation or policies. Let's say after 20 years, the government bans all the coal-powered factories. Okay, because it's leading to carbon dioxide emission, and we cannot afford anymore. What will happen to all the coal-powered plants? They have to think of some other. They will divest from that and invest in some other climate-friendly energy sectors. Correct. So that's a transitional risk caused by regulation or policy. There could be, let's say, there is a policy which severely or heavily taxes carbon footprint. So if you have based on your carbon emission, you have to pay taxes. Then business may not be viable, so you have to move to some other sector. Because we are going to a different kind of economy, which is energy efficient or climate friendly, a lot of your equipments, assets, technology may become obsolete. Let's say if everybody goes for electric vehicle, maybe 30 years down the line, because it is energy efficient. Then this diesel, petrol, gas driven vehicles, that those engines, nobody will make those engines anymore. Right? That's a transitional risk. Okay. So it is, so we talked about regulatory pressure. We talked about technological obsolescence. Technological obsolescence means you go into a different state of economy where these technologies become unviable. There is no demand for this technology anymore. For example, the diesel 4-stroke engine may become redundant 30 years down the line when everybody switches to electric vehicle. Okay. Stranded assets. You have big coal mines, oil fields, but there is no demand for those products anymore. You cannot use oil or coal to burn and create energy. It is banned, or there is no demand. So your assets become stranded, useless. There is another interesting source which has to do with customer sentiment. So we talked about regulatory pressure. We talked about technological obsolescence. Technology becomes obsolete because there is no demand. The other is customer sentiment. If so, it so happens that customers, the society becomes so conscious with this whole environment friendly idea that they will only prefer, climate friendly products, environment friendly products, green products. So suddenly the demand for the other products decreases. Okay, so that's driven bottom up from consumers' sentiment. So because of all of these, there could be significant loss to your assets, and that's transitional risk. Nothing happened physically. There is nothing that happened in the environment that came and damaged your property or anything. Nothing. Simply because we are going to a futuristic or a different state where the demand or the usefulness of the existing infrastructure is no more. So that's transitional risk. Okay. Gaurav has a point. We are depleting lithium to make batteries. Exploitation of minerals on name of sustainability. I feel confused. To some extent, yeah, you are right. But using lithium is fine because if it is not causing any physical risk or any risk. If it depends how you charge that battery. Okay, so if you are using the coal to burn, right, you're emitting CO2 that is leading to global warming. And if you are, I would say, so actually better example would be solar power or wind energy. All right. And how do you charge those batteries? How do you get the electricity to recharge those batteries? So those would be the considerations. Are we using coal power or oil power? Then it is problematic. If you are using energy efficient means to derive energy, then it will be climate friendly. Yeah, we are in a transition phase right now. So we are going from fossil fuels to climate friendly energy resources. But so the idea is to accelerate solar energy and wind energy. For transportation specifically, it is not possible to become completely environment friendly. However, if you are running, let's say, power plants and other things, then if you are totally wind power driven or solar power driven, then we would say yes, that's environment friendly. There are some unfortunate businesses or requirements which would require some kind of carbon footprint. Example, transportation and other things. Yeah, it is not possible to be 100% environment friendly, but in net, are you carbon neutral or you have zero emission? That's what we are striving for. So more to come on that. We'll have more discussion on that. Did you understand the main difference between physical risk and transition risk? And these two, chronic and acute? Okay. All right. So yeah, we'll have a detailed discussion on this. At this point, we're keeping it at a very high level. All right. So how is the climate risk relevant for banks? We are all risk management people, so let's quickly look at that. Climate risk for banks. So as I mentioned earlier, right, this climate risk, whether physical or transitional, they manifest through various channels. They manifest into the familiar risks that we know of, right? Credit risk, market risk. How does that happen? Let's see. So I took this from Basel, one of the papers. So let's talk about credit risk. So it says credit risk increases if climate risk drivers reduce borrowers' ability to repay and service debt, which is called income effect, or banks' ability to fully recover the value of a loan in the event of default, wealth effect. Now, can somebody explain to me what is this and this? What's the difference between these two? And there are actually familiar terms which explain these two. What are those terms? So just to give an example, right? Think of a physical risk. It's very easy to relate. A flood happened. Bank has given loan to a real estate business. So real estate business has taken that money and had made wonderful exotic buildings around Florida Beach or Miami Beach. Okay. Flood happens all the time. Now, if flood happens, that real estate business owner will suffer from, so bank will suffer from credit risk. But what are these two different things? What is income effect? What is wealth effect? The first one is ability to repay and service debt, which is income effect, which is otherwise known as what? I'm just looking for the term PD. This is probability of default. Exactly. So the real estate business owner, maybe his main income is rental income. So the buildings have been rented out to corporates who are conducting their business, and the real estate owner is earning rental income. If a flood happens, corporates will relocate, or there is a damage or something. So there is impact to your business, there is impact to his earning or cash flow. So he will not be able to pay the loan, right? So probability of default will increase because his business is down. The second one is bank's ability to fully recover the value. This is talking about LGD in the event of default. This is the wealth effect. Now, LGD will also increase. Why? Because the pledged collateral or the pledged asset, in this case, are the mortgages or the houses. That example we have taken. The value of those mortgages will also decrease after a flood or if a flood happens. So the amount that you can recover by selling those mortgages will also go down. So your loss will increase. So both PD and LGD go up. And those are the two key ingredients for credit risk, right? So that's how it gets affected. Now, when we talk about market risk, when we talk about market risk, what do we talk about? We talk about market prices. What kind of prices? Stock prices, commodity prices, foreign exchange rate, those things. How do those get impacted by climate risk? Obviously, if a particular company has a headquarter in the easiest way to relate this is with flood or earthquake. Okay, you can think in terms of all kinds of physical risk and also transition risk as well. So we will have a detailed discussion on this, but keeping at a high level at the moment. So if a company's headquarters, let's say, is in a flood zone, obviously if a flood happens, the stock prices will, for that company, will collapse because there is significant damage to the properties and assets, right? Similarly, if you look at bond prices, even government bonds, right? If there are countries which are in the flood prone area, West Indies, right? So the sovereign bond yield and spread also increase because of this flood. So it affects households, corporates, sovereigns, everybody. Actually, the yield and the spread example that I gave you, well, so when we talk about spread, it is actually comes under market risk. But we talk about probability of default, it comes under credit risk. But there is some little bit of overlap there, but that's fine. We understand that it is a risk. FX risk also. If there is a particular country and heat wave has come, or there is a wildfire and there has been significant damage in a particular location or for a country for that matter, then the exchange rate will also get impacted. Okay, so all of these, another example, commodity, that's very easy to relate, right? If there are environmental calamities that impact, let's say, agriculture, like something happened systematically, all the corns got damaged. It could be at a particular locality, it could be spread over a larger area. But then so agricultural commodity prices will be impacted because of that. So we are talking about market prices. When we talk about market risk, it is FX, commodity, stock, all those things. So yeah, that will lead to market risk. Okay. Similarly, we have liquidity risk. It is possible that if something, systematically, some disaster, something happened in a particular area, then it is possible that, depositors or creditors will withdraw their money. And that will lead to liquidity crunch for the bank. If the depositors withdraw their money, then obviously bank will run into liquidity crisis. It may happen because of a climate event. Okay. And there is operational risk also. So anything to do with what is operational risk? It has to do with failure of people, process, technology, right? Three things. So also compliance risk is part of operational risk. There could be, systematic changes in the regulatory landscape. For maybe the regulators would want, let's say, banks need to have 20% portfolio dedicated to green financing or green bonds. You know what green bonds are? Or green loans? What are green bonds? Any idea? Yes, as Johnny mentioned, financing for environment sustainable projects. Correct. So you borrow money, corporates will borrow money by issuing bonds, but that money is earmarked for a specific environmental project. You cannot use it anywhere else. So those are green bonds. So there could be regulatory pressure for banks to comply to a particular standard to combat this climate risk. So failure to comply with those standards is compliance risk, which is part of operational risk. And it could be disclosures also. If you're not properly able to disclose your climate risk data points, then that is also compliance risk. Also, I mean, which is part of the operational risk. And there is also reputational risk. This is, yeah, so as I mentioned, right, there is increasing demand from the consumers and customers for ESG products or climate friendly products. So if you are not doing that, then your image compared to your peers is, it goes down, and that indirectly affects your credibility and business. So it is driven through customer sentiment or changing market preferences. Okay, so you need to have good ESG score. Brand image is important. All right, so detailed discussion we'll do later on. Yeah, so for us, we are risk management people, right? We need to start capturing those data points, right? When you give a loan to an obligor, you have to measure all of these. So is his business going to be affected by one of the plausible climate risk climate events? Then you have to start capturing those and modeling those and readjust your PD LGD estimates. That is for credit. Similarly, for other risk also, we need to start considering additional data points and additional sources of uncertainty, which never factored in the traditional risk management practices. So that's the whole idea. Okay. Coming to disclosures, we'll talk in detail about this. So ISSB, which is International Sustainability Standards Board, okay, it's part of IFRS. So they have come up with 2 exposure drafts, one related to sustainability, and so it's called S1. It's called IFRS S1. The other one is called IFRS S2. Here it is, IFRS S1. S1 is for sustainability and S2 is for climate related disclosures. So they have come up with the draft for, banks have to disclose the exposures to various components under sustainability and under climate risk. Okay, so tentatively they have agreed that the banks need to start disclosing these by 2024 January 1. We are expecting another formalized guidelines to come through soon by the end of this quarter. This is still at the draft stage, but we are waiting for a finalized requirement. But they have given the data points that we need to start capturing. Banks need to start capturing. All right, we'll look at these documents later, but this is from a disclosure standpoint. Yes, this is for banks. Financial reporting standard, yeah. All right, so next question is why now, and how did it start actually? why this thing was not before and why suddenly it has become important right now. So just, very quickly to give you a background, this is climate change, the history of climate change. I took this from our SCR GARP syllabus. So if you see temperature change, right? 1860, 1900, between these, we have taken the reference as 0. Let's call the average temperature between 1860 to 1900 as 0. All right. From that point onwards, this is how the total average temperature of the world has increased. Okay. By end of 2020, we have the average global temperature has increased up to 1.25 degrees centigrade. That's a huge amount, actually. If you think of from an average statistic, right, of the entire world or Earth's temperature, 1.25 is actually very significant. And this is the benchmark. We call this as the pre-industrialization era, because industrialization started somewhere at around 1900. So after that, the temperature has increased exponentially. There are a lot of evidence why the rise in temperature or the global warming can be attributed to human activities. We contributed to global warming. See, just because the temperature of Earth increased so much doesn't mean that we caused it, right? But there are a lot of evidence that points to us, we human beings, being the culprit for this. One of the reasons is that why did it increase after 1900 like this? Because 1900 marks the beginning of industrialization. All right. There are other reasons. We'll talk about that later. And this is from satellite. This is surface thermometer. This is satellite temperature from 1980, so 40 years back. This also shows that it has increased. Rise in temperature has been verified by different instruments, by different independent agents or bodies. So the fact that globally the temperature is rising is without any doubt. Actually, it could not be like accident, because see, instruments can cause error, but this has been conducted by a lot of bodies independently with different measurement technologies. Everywhere we found the same truth: there is global warming. So these are chronic factors, right? Rise in temperature, it's a slow, gradual event. Sea ice extent. The ice content on the sea has been decreasing. Ice caps are melting. And both in the sea and glacier ice, both are decreasing. You can see this. And what is the consequence of this? Obviously, if ice melts, where will it go? It will go to ocean. Yeah. So ocean level, sea level, it has been steadily increasing. These are all chronic. Okay. See, if sea level slowly rises, the flood probabilities will be much higher. Correct. And ocean heat content is also increasing because of two reasons. One is obviously because of global warming, everything gets hot, right? So ocean also becomes hot. And because of we release CO2 into the ocean also. So that also increases the heat in the ocean. Why the heat, ocean getting hot is important is because of the diversity that's in the biodiversity in the ocean. The species that live in the water, they might become extinct. That will cause ecological disruptions, right? Because if the heat is increasing, maybe some of the species will not survive. So there are a lot of these considerations. So all these climate change has today, it has become very important because now everybody has become conscious, because if it continues like this, then we will come to a state where there will be no recovery, right? So we have to act now. Yeah, so this is at a high level the history of like how the climate has evolved in the past. And this is the so when we talk about climate change, primarily we think of global warming, but there are other things, right? There is sea level rise, there is rainfall patterns, we have extreme weather events, either frequent rainfall or frequent drought, correct? So yeah, so that's yeah, so this picture tells you more about the temperature change. If you look at the industrial level, so this is in comparison to the pre-industrialization period, 1850 1900. From that point onwards, today, how the temperature has changed at different locations, you can see that, right? On an average, it has increased by 1.2 degree. But if you see here, the Arctic poles, North Pole, South Pole, right? They have been impacted the most, 4-degree change there. Okay. Arctic means North Pole, South Pole. That's the Arctic. Surface thermometer is the thermometer that you use, on Earth's surface to measure the temperature directly from the surface. And satellite can also use thermal vision to detect the temperature. So the whole idea is we are using different instruments to ensure that we are not, relying on a single instrument because it could be erroneous. So that's the reason. So this is how the climate has changed. This is where we stand today. Now, what has happened in terms of international countries coming together internationally to combat this particular devastating change? There has been lots and lots of small conferences, agreements, other things, but there are two major federations or meetings that have happened, which are important milestones. So I just wanted to highlight those. There are a lot of small conferences that happen on this topic, but we'll talk about those later. The first one that happened is Kyoto Protocol in 1997. I'm pretty sure you must have heard about this. This came into the news. So what happened is, in that Kyoto Protocol 1997, there was a legally binding agreement that was created for high income countries, developed countries, essentially, to reduce emission by 5%. When you say emission, this is CO2 emission by 5%. Why we're talking about CO2, by the way? Because CO2 is one of the greenhouse gases. We'll talk about greenhouse gas later. Basically, greenhouse gases are the gases that trap heat and lead to global warming. They are the main culprits of global warming. They remain in the air, and whatever energy, whatever heat that Earth receives from the sun, it radiates back to the space. But in that space, if we have greenhouse gases, then they don't let the heat escape to the space. They retain it. And that leads to further increase in the Earth's temperature. What are the greenhouse gases? Carbon dioxide, methane. There are halocarbons also, which are emitted by your ACs and other things. But CO2 is the most important one because if you compare other greenhouse gases, CO2 has a higher volume. And we are emitting CO2 rampantly, right? Yeah, so when we talk reduce emission by 5% compared to 1990 level, so whatever CO2 emission was there, at 1990, we will reduce the emission to 5% of that level. That was the legally binding agreement among developed countries, because developed countries are the ones who contributed to the greenhouse gases the most, right? So they were much ahead in industrialization. So they contributed to the emissions primarily. Before we started polluting the air, they polluted. So that was a legally binding agreement among the developed countries. However, this was not successful. This was not successful. Yeah, the countries could not fulfill the mandate, because there are a host of other reasons. It was not inclusive. Why this binding agreement was only for developed countries? What about others? All these things happened, right? So this did not work. But then there were a couple of other conferences after that. But then the biggest, most successful one is the Paris Agreement that happened in 2015. This is the most important conference that happened in climate risk, which was actually successful. So here there was, so it's very interesting. In Paris Agreement 2015, this is the main sort of milestone, after which everything changed. I think 190 countries participated here. There was nothing legally binding that came out of this meeting. But countries voluntarily, they came up with their own plans in terms of how do we plan to reduce our emissions. So I'll show you that website which has the details. So what was agreed is that everybody agreed, looking at the climate, the rate at which we are affecting the climate, everybody kind of agreed that we will keep the global temperature rise well below 2 degrees centigrade. This is in reference to the pre-industrialization level. Already we have contributed, right now we are close to 1.2 degrees centigrade higher than what it was at during 1990. We are at that level, 1.2 degrees centigrade. So the agreement is we should limit the rise to well below 2 degree and do best efforts to limit it by limited to 1.5 degrees centigrade. That was the agreement. It was an agreement. It was not legally binding. And as responsible entities, every country actually came up with their own plan. It's called Nationally Determined Contributions, or NDCs, to achieve the net zero emission. So ultimately, if you reduce your carbon dioxide footprint, it will help you achieve this milestone, because CO2 emission leads to the global warming. So if you reduce the emission by going into energy efficient mechanisms or climate friendly means, then that will significantly reduce the global warming. All right, so let me actually show you. 1 second. Oops. So this is the IFRS sustainability draft that I was talking about. This is S1. It's about sustainability, and there is another one which is 1 second. Yeah, this is S2 is for climate risk, climate related disclosures. So just to show you a little bit of, just to give you a glimpse of what they have. So they're actually asking for suggestions. Do you agree with these points? Do you agree with the deadline? And there was a survey that was conducted among different participants. And yeah, scope is climate related risk entities exposed to, including but not restricted to, physical risks, right? Transition risks that we just discussed. There is governance aspects in terms of all the risks and opportunities, everything you have to highlight within governance, within strategy, uh, climate risk. Yeah. Okay, so we will do a deep dive into this later, but a lot of these things will not make sense to you at the moment because we don't have a lot of facts to appreciate all of these, right? So we'll come back to this. Okay, so the one that I wanted to show you is United Nations climate change. This is called UNFCC, United Nations Federation for Climate Change. This is the most important body for climate change. I was mentioning about Paris Agreement, right? This was the most significant conference that happened on climate risk, after which pretty much everybody became self-conscious and self-righteous and started contributing their bit to combat climate changes. So I'll show you. So NDC is nationally determined contributions. Nationally determined contribution. Every nation has published or agreed with a specific type of emission strategy. I'll show you about probably United States and then India. So this is very important, both for the SCR exam and in general. It's a little bit slow. Okay. Yeah. United States of America, first NDC after rejoining the Paris Agreement. Let's see. Reducing greenhouse gases, United States 2030 emission target. So this is the claim. The United States is setting an economy-wide target of reducing its net greenhouse gas emission by 50 to 52% below 2005 levels. So whatever the emission rate was in 2005, by 2030, they want to reduce 50% of that. That's a very ambitious goal. So this is the historical path that United States has taken from 1990, right? And this is the projection. All right, that's the statement coming from Joe Biden. Then let's go back to, let's go back to India. Every country has come up with their own plan. And while it opens, so it's actually a little surprising. It brings up a very interesting aspect of human psyche. Compare Kyoto Protocol, which was legally binding, but it did not work. And this was voluntary, but it worked. Do you know why? Why Paris Agreement actually worked? Everybody has become conscious and is behaving responsibly, and we are working proactively to meet the NDC set by the country. India has updated first nationally determined contribution under Paris Agreement to reduce emissions intensity of its GDP by 45% by 2030 from 2005 level. Okay, 50% cumulative electric power installed capacity from non-fossil fuel based energy resources by 2030. Okay, so things like that. What was the reason why Paris Agreement actually worked? Ankit has a point. Public image. Yes, that's the reason. Peer pressure is the tool. Regulations did not work. Peer pressure worked. Sometimes peer pressure is stronger than law. Peer pressure can be stronger than the law. Gaurav has a very strong statement. Do we think it can be stopped? We can delay the doomsday by a few decades, but can't stop it. That's a really scary image, right? Um, the After reading the text, I have gone through the whole syllabus. I have read all the pages once. So what I feel, so see, we have to be optimistic, right? And we can reverse the process, but we have to act early. The CO2 that is there in the air today, it can actually be reduced. We know about the tree plantation, obviously, but there are other ways. There are other ways in which you can actually capture the carbon dioxide directly from the air and store it and put it away. There are ways. There are a lot of ways that are there. It's called geoengineering, the one that I explained. But there is no other way, right? We have to try it out. I mean, otherwise, we'll meet the ultimate disaster. So we have to act. And it is possible, because if we earlier there was no intention or drive for the green energies. Today we have the technology. Electric cars are becoming cheaper. So electric car, maybe it has a little bit of as in it will not be as clean because it will use batteries, to your point, but at least it will be much better alternative than using diesel powered or petrol gas driven vehicles, right? They at least electric vehicles do not lead to emissions. That's a very important point. So I think also there is an interesting statement. Don't remember the exact number, but I think if you create, I mean, this is obviously hypotheticals, but if you can create a I think it's 10,000 or 1 million, I'm forgetting, 1 million kilometer square area of solar panel, then you can meet the energy demand of the whole world. There is a statement like this. So today we have means, and just have to make it affordable and invest more resource and energy. I think so. I am optimistic. I don't know about others, but yeah, one more thing. So we are reading all this, but we also play a active role in this, right? I would request all of you to be a little bit more conscious for real, because if we do our bit, then I think we are contributing to this goal. Right? So whatever you are buying or investing in, consider about ESG, consider about environment, climate, all of these things, because we are always also a part of it, right? Yeah. So that's NDC. And let's see. Yeah, I didn't have anything else. Yeah, this is at a high. So yeah, this is what I wanted to cover for this orientation. Let me know if you have any feedback. So going forward, what we will do is next class we'll do we'll stick to this time, Friday 7 a.m. If we can come up with a better time slot that works for everyone, we'll do that. But for now, let's keep this official. Next class will be the same time, but we'll start with the SCR syllabus. This might be a little boring. Definitely, there are a lot of facts, but you need a solid background to be able to, model, because you need data points. For data points, you need to understand facts. Okay. And, it doesn't hurt to have a degree, right? So it's from GARP, it's a reputed institution. And do it now, because later it will be costly and more difficult. So let's cover this. Okay. If you're shooting for October, go ahead. If you're, if you want to appear it next year, the syllabus might change. It's up to you. I don't want to force, but yeah. So this will be our first priority going forward. And I will try to relate practically to, I'll show you the websites and links from time to time to show you what is going on currently, because the text could be a little bit older. so that it remains interesting, right? And yeah, I'll try to ensure that we don't feel like we are just mugging up all the stuff all the time. Okay, any other so what I wanted to understand in this session is, do you guys have any other specific requirement from this course? I'll be happy to add those, because this is a new topic, right? Anything from your job requirement or anything, personally, if you need help in climate risk, let me know the areas. If it is possible, I'll add it. Could be specific to any regulation or any specific climate risk model that you have been exposed to, but you're not able to understand. So if it is relevant, definitely I'll include it in the course. All right. Any other feedback or any suggestions to enrich the course? Let me know. I'm all up for it, because this could be boring. I'll try to keep it interesting. So someone has a question: is it theoretical paper or objective or mix? Now, how many questions are there? See, questions will be MCQs, right? But it will be highly fact-based. If you're talking about SCR exam, they can go into each and every sentence and ask you, this body in this year recommended, which of the following statements is correct? We are 95% sure that human beings have been responsible for modern global warming. Second option could be, we are absolutely 100% sure. Things like that, right? It could be very, very detailed, but nothing out of the syllabus. You just have to read it and do a little bit of memorization, because every word can become a question. That is what I have seen. Fortunately, there are not a lot of pages, 200 pages, but every sentence can become a question. Okay. 40% of the syllabus you can connect conceptually, so that you don't have to remember everything, memorize everything. But rest 60%, yes, cold hard facts. Right. So there could be like this is so there is a task force on climate risk change, TCFD. It came up with its own disclosure standards. So there are 5 points that banks need to disclose. Which of the following is not a point? So these questions would be like this, right? So it'll need practice. Don't worry, I'll create mind maps. I'll create flashcards, so you don't have to go back to the text. It's very hard to revise the syllabus if you rely on the text that is given, because in one page you'll just find paragraphs after paragraphs after paragraphs. Okay, so I'll try to create mind maps for you. I would recommend, don't go for any other third-party books, because you see, GARP itself, the core textbook itself is 200 pages. It's not like 1200 pages like FRM. It's only 200 pages. And if you go for another vendor, there could be information lost in translation. I would recommend, so I will try my best to ensure all the information is captured in our slides or flashcards. So that is something I can ensure that I don't miss out on, because I'm also preparing, right, for the exam. But yeah, I don't recommend going for any other abbreviated or study materials other than the core reading. Not needed, not recommended. Okay, any other question, guys? Once you register for the exam, you'll get the book. It's an e-book. So you can download it in your tablet or whatever laptop. There is no extra fees for the ebook. Okay? Once you register for the exam, you get it as part of the exam fees. Yeah. Any other specific needs from this course, let me know, because all of you have joined this course with obviously some expectation. Is it relevant? Highly, yes. You would have already felt after today's session, right? It's coming everywhere. So definitely from your job prospects and, to enhance your CV, this is extremely important. Other than that, if you have any specific needs from climate risk, let me know. All right, that's all I had then. I'll not keep you for long. We'll meet next week. I'll start with chapter 1 of SCR. Okay. All right. Thank you so much.